I'm a dreamer to you, baby, on my heart, wandering the streets tonight.
Ladies and gentlemen, our next panel session, Navigating the Future Landscape of Venture Capital, will begin momentarily. Please take your seats. Ladies and gentlemen, our next panel session, Navigating the Future Landscape of Venture Capital, will begin momentarily. Please take your seats.
Rain is not keeping people away here.
Well, decent showing. We don't want to be the one right after lunch.
Hey everyone, thanks for coming to join us on this lovely Santa Monica day. We were not expecting a monsoon this afternoon, but I feel like the Montgomery Summit, we always get the unexpected 4 years ago, we came here. COVID was just breaking out. Half the people left. Last year, Silicon Valley Bank was just deteriorating. And this year, we have a storm. So never a dull day in venture capital or the Montgomery Summit. But we have a great group here today of distinguished VCs and lobbyists, I guess, or advocates to tell us about what's really, I think, a fascinating time to be in VC. It's certainly a fascinating time to be covering it. And so I just want to ask each of our panelists very quickly to give a brief introduction and to tell us what the mood they feel at this conference is right now. Are there deals being made? What kinds of deals are you feeling optimistic? And let's start with the legend himself, Tim Draper.
Yeah, I'm Tim Draper, Draper Associates. I'm in the venture business. And I have seen several cycles, and I've seen it go up and down and up and down. And it really is interesting. This one felt like it was going to be much deeper and harder than it ended up being. And now optimism is back. And I think that that's exciting. And it's great because as venture capitalists, you are providing hope for the world. And I think that that makes it really makes a big difference in the world. And I think when you get to we had a big high in 2021, I guess, and then it came rushing down, and raising money for the next couple of years was pretty much impossible. Even if your record was extraordinary, it was almost impossible because the LPs were looking and going, well, I'm out of this venture stuff. And they look at it in a very thin way. They're not thinking of it in a deep way that, hey, maybe now's the time to come in. They all like to jump in together and then all like to come out together. So they were out for a while. Now they're starting to go, oh, wow, this AI thing seems to be real. This Bitcoin, now they got the latest. This is going to be a pretty big thing too. And in data for science, data for healthcare, it's going to be pretty important for healthcare. And maybe this space stuff, maybe that's really important too. And hey, I don't know if we're going to start coming back into. We just had a discussion about it, into quantum computing, but I think they'll be racing into that at some point. So it's feast or famine. If you're an entrepreneur, just know that there isn't a lot of logic to when the venture capitalists have the money and are ready to invest. So don't wait for yourself to ship the product to raise the money. Get the money, sit on it, think of it as a war chest, and then ride it out. That's probably enough for me.
So Paul Madeira from Tech Capital, and we're a little different than Tim. We're a later stage focused firm, so the market does look different. We're at the end of the whip. We're the ones who get bounced around valuation-wise significantly more than the early stage investors, and our cycle is still recovering. We're still moving quite slow. Most of our peers are going very slow in terms of investing. And we're waiting for some of the money that has flowed into our sector to go out and to see some rationality return to the pricing part of our market.
Brian, how are things looking for you?
Great. Hi, everyone. I'm Brian Morton with Stepstone Group, one of the partners leading our venture and growth business. We're a little different than the others on stage. We're kind of the money behind the money. So we're one of the largest allocators into the venture and growth ecosystem as LPs and managing capital on behalf of a lot of other institutions. And so it gives us, I think, a unique purview into kind of every stage, every geography, every sector of the market. We invest in funds and also do directs and secondaries. I'd say some of the mood of this conference so far, and we just came off of our own kind of similar conference last week, definitely seems like we've moved beyond cautious optimism to I think there's definitely that glimmer of hope and excitement as much of the market, maybe not the late stage, but a lot of the market has started to rationalize, and the supply demand of capital has normalized. And so I think we see this across our client base. There's definitely interest in building and adding venture exposure. But it's also difficult because there's huge segments of the market that are experiencing tremendous pain, and there's still more pain to come. Companies that were overfunded, don't have business models that work, may never work. And there's lots of people working at those companies and lots of investment dollars still at work in those companies. That all needs to unwind. But then at the same time, you have this juxtaposition with AI just really driving this a lot of investor enthusiasm, a lot of LP enthusiasm, and I think it goes to show that like the venture asset class doesn't, you can't time the market, right? You need to be a consistent investor in the innovation economy through the cycle to get the benefits from it. And so I'd say, in summary, a little bit past cautious optimism, and excited about this year and what's to come.
Great to be with you, Bobby Franklin, National Venture Capital Association. And I'm probably the most unlike anybody up here in that, as you said, Ben, I am a lobbyist for the industry. I like to think of us as we're lobbyists for the entrepreneurial ecosystem. We're actually lobbyists for startup companies. It's just that venture capitalists are members and support the work that we do. So I look at it from now 11 years into the position, and you see the cycles come and go in terms of capital coming in, and you see the optimism. I love being around VCs because they're the eternal optimists, like you said. There's always something to look forward to going on in the industry. And then our members look to us and go, okay, so what's happening in Washington? And I wish I could say that I could be the eternal optimist talking about Washington, but many times that's not possible. So at the same time, everybody's excited about investing in AI. We have 115 bills introduced in Congress to figure out how to regulate or how not to regulate. We've been waiting on stuff for blockchain, still not there. We have an SEC that has put out rules that we've now had to take them to court, and we're litigating in the Fifth Circuit Court of Appeals. We now have ideas on the table. There's a rulemaking ongoing for FinCEN, Financial Crimes Enforcement Network at your Treasury, for venture capital firms to create anti-money laundering departments at your really big venture capital firm. I'll remind you, the median-sized venture firm last year was $35.7 million. So we're faced as an industry with a lot of Washington entanglement, and that's what NVCA is here to do, to clear it up.
It feels like the NVCA is playing a lot of defense. And I wonder if there's a marketing spin you could be using to start playing offense. I mean, now's sort of the time pendulum probably will start swinging back and away from all these control freaks, and make it more free. And you can stand up pretty proudly and say, look, in 4 hours you can get your toothbrush. You can drive a car that's really good for the environment. You can search for anything, anytime. You can learn anything as quickly as you want. That is not because of government. None of that is because of what you guys have been doing. That's all because of venture capital, entrepreneurs, and you. I mean, I think it's one of those. This is one of those pivotal times.
I think Tim's trying out for the board of directors for NVCA.
Are you right, Tim?
No, I'm good. I'm good.
Contribute to your
That's
I'm just sending a message through you.
You guys can chat after. But Tim, I did want to ask you, speaking of Washington, you said you wanted to talk a little bit about the presidential race. You said when I saw you yesterday.
Really sad.
Yeah, well, you tweeted on Monday to your 250,000 Twitter followers that you thought Nikki Haley was likely going to be the nominee. Today she dropped out. What do you think?
Drop out. She put it on hold.
Well, and
but I think she's out unless some miracle.
So
she's a winner. By the way, she knows how. you guys all run businesses, whatever. She knows how to run a meeting. She is extraordinary at running a meeting. So keep your eye on Nikki Haley. Whatever she ends up doing, support her, go for it. I was thinking she was going to create peace in the land, but I guess we have to watch the cage fight.
So who are you gonna?
Cage fight of two 80-year-olds. Hell. Actually, I might pay to see that.
Now that Nikki Haley has stepped aside or paused her campaign, who are you going to support now?
I don't know. When you say that, I got that fight or flight feeling. Like, hey, I hear India is really hot right now.
Okay. Well, you can think about that. But let's get back to VC. So I wrote a story this week about a wave of zombie VCs coming. There were about 18,000 active VCs in deals in 2021. Last year, that number fell to about 10,000. So there's a lot of VCs that have stepped back, and there's various reasons for that. But I'm curious what you're seeing there. If you expect that trend to accelerate, and are we going to see a lot more VC firms disappear?
Hey, you want me?
Sure, you
can. I think venture capital is fantastic, and I've had a mission of spreading venture capital entrepreneurship around the world. In the last decade, we proliferated venture capitalists all over the world. It's been fantastic. It's been a great addition to the global economy. It's given hope to entrepreneurs everywhere. It's really been a fabulous thing. The newer venture capitalists came in. I think those are probably the ones that are probably backing out now. And they thought it was just like, oh, money from heaven, no big deal. We'll just get into this business. It is a business. It is a tough business. And you've got to stay with it through thick and thin. You got to know that when there's a wave that's coming that's going to get really high and then it's going to go really low. And you've got to prepare your companies for it. I remember telling my companies, I told all my companies, look, from 2021, 2020 on, I was thinking it's getting pretty hot. I said, raise as much money as you can. Don't spend it. Think of it as your war chest or your lifeblood or whatever it is. But I think that there were other venture capitalists that were sort of going, oh, yeah, you want to, you got a term sheet at a $50 million, I'll pay $100 million. Or you got, you're looking for $10 million, here's $100 million. And then there were new young VCs who were thinking, oh, it's great, we'll invest in all of these people and everything will be great. And then all of a sudden, boom, they're all out of money. What are we going to do? How do we go from here? And so they backed out. The good news is that it will come back, and there will be other great companies, and they'll become extraordinary and bigger than we couldn't imagine a billion-dollar company when I was early in venture business, and now we've got what, $4 or $5 trillion businesses. I wouldn't be surprised if one of all of us, backed a $10 trillion business. And I think that market will continue to grow. I think we're going to see much more of a global marketplace. I mean, we're all global now, whether the politicians want to isolate us or not. We're a global market, and it's a big one. So you hit it right, you get it in the right place, you're going to have a big win.
Well, there's been a lot of, even to what Bobby said, the median venture capital fund is 35 million in size. Like that's, if you apply a 2% management fee on that, that's not really enough to really sustainably run that organization. So what's happened because of the low barriers to entry in the venture asset class and the, at least perception of easy money, there was such a wave of new entrants, thousands of new solo GPs and new entrants into the space, which is great for the innovation economy. But what happened was they weren't necessarily as experienced in the craft of venture capital. So haven't done things like manage reserves in their portfolios, support their companies, and frankly have too shallow of track records to actually raise a subsequent fund. So there's hundreds, if not thousands, of small venture capital funds that have fully invested or nearly fully invested their funds, probably have no prospects of raising a subsequent fund. And so I think your article on Monday, I think, if anything, underestimates that. Now, the implications aren't really that severe because that cohort of zombie VCs is still a fairly small portion of the dollars available that's invested in the venture ecosystem. I think some of our data over the last couple of years, something like 75 or 80% of all the LP dollars invested in the asset class were really only to maybe 15 or 20 platforms, right? And so there's been this aggregation of LP dollars as well. So there's the zombie phenomenon of VCs is very real. Many of them are not active because they don't have the capital to be active. But that I don't think will. If anything, we're excited about it from a secondary perspective because anytime you have net asset value in companies that's locked up, then it creates an opportunity for folks like us. But I don't think it'll be as severe for the entrepreneurs.
Explain what you mean by that. So are you seeing VCs come to you and say, "Hey, do you want to take my book at a 75% discount," or how does that work?
Yeah, I mean, it's not as severe as that right now because there's not a forcing function, right? You think about if you're a solo GP of a $30 million fund, you have locked in 10 years of management fees, regardless of your performance. Um, And so we haven't seen like the desperation yet. But what may happen is when it's not fun anymore, and the managers of those small funds decide they don't want to be VCs and say they want to start a company or something like that, they may break the key person clause of their funds, and therefore the LPs would then have power to redirect who's managing that portfolio going forward. So I think all of that's going to happen over the next handful of years. So yeah.
Yeah.
By the way, I get very motivated listening to Tim. He always charges me up. But I will say, we
Wait,
have,
there was up there.
yes, there is. No, I have a button. There's too much money in the system. I mean, we have way too much money sitting in pools of venture capital. Much of the money invested over the last couple of years has been at way too high of prices, so there isn't return opportunities for that. And for us to get back to a healthy ecosystem, equilibrium, we've got to see more zombie funds, and we will. They're coming. It's going to play out over the next few years.
How soon is it coming?
Oh, longer. Um, I think that's going to be good. And this happens in the cycle. Things refresh, things get restabilized, and then we'll charge forth again. But it's going to, and maybe I'm speaking more to my space, a later stage space, which I'm seeing every day. We're still a little bit irrational. In
If you're an entrepreneur at one of those companies on your cap table or one of those VC firms, right?
Well, it's really good for some of the AI companies who have the magic trifecta of having the exact right founders doing the most interesting thing in AI, and they're out there raising right now $1 billion without any revenue, and that's happening right now. And then on the other side, there's other companies that are decent companies that have too high a last round price, and it's a challenge.
Hey, Paul, I got a thought here, and that is that when you guys fund these companies, um, we see it from a different perspective coming up, hoping the company gets your money and goes further. And when you fund them, you've got, you know, liquidation preference and all that stuff. That's fine. But then when the liquidation preference becomes a big monster,
Right.
then the entrepreneur no longer has a clear path to their own success. And you carve out things for them. And it becomes a kludgy cap table that none of us really benefit from. But you kind of have to keep in a down market. You kind of have to, you want to keep those valuations high so that these guys will fund you the next round, right? So, so we get the kludgy cap table, and you keep it that way instead of just saying, let's just convert everything to common. Let's just build this thing and figure it all out, and let the entrepreneur have a clear path to success, whether he turns it into a $20 million business or a $20 billion. So what can we do about that? You need to still be able to report to those guys that you've done okay.
Right, right.
And we need a better path so that when you put money in at a high price and then you put money in at a low price, all of a sudden we've got this horrible cap table.
That's right. And if you've been around the block like we have, when you do that, somebody gets screwed and they're very unhappy.
Right.
And by the way, we all think the other guy should fix their cap table.
Right.
It's a real problem, and it is hard to do because not only do we do inside rounds that will prop up the last round price sort of irrationally, we'll go out and take on debt. There's a lot of debt providers here who are standing by to provide that debt and help avoid that down round, and that also just extends the period for the reset.
What's interesting? And then the entrepreneur loses their motivation.
I know.
Their motivation becomes one of just raising their salary and not worrying about what the stock's going to do because they know they can't overcome.
I do want to ask about another issue with regards to too much money, because it was reported today by Axios that Andreessen is raising $7 billion across their funds, which they're going to close in a few weeks. But I think we've seen the question lately: is bigger better? Because with AI, there's talk now that you can have a 3-person unicorn. Do you need all this capital? And that is sort of antithetical to the business model of venture capital. So do you think that we're going to be seeing...
Is that one person and 2 deep techs? I mean, deep fakes?
Maybe. Or you could even have a 1-person unicorn with AI. So do you think that these mega funds are going to be lucrative for their LPs, and do you think that model is going to work?
I'm happy to jump in on that.
Oh, please do.
Yeah, look, so on the AI changing kind of the cost structure of companies, I mean, I think that definitely references building products, or getting to that MVP, using AI tools to do that much more capital efficiently, which has been a trend that the venture asset class has benefited from for over the last 20, 25 years, as every kind of technical innovation has made it cheaper and cheaper and cheaper to innovate and create products. Now, that's different from the cost of actually scaling up and going to market, right? And so I think that continues to be quite expensive for for many companies, even software companies, to field sales forces and to go acquire customers, spend on marketing, et cetera. So, that said, I mean, it's kind of tried and true, or well understood, that smaller venture funds not only have the broadest dispersion of returns, but tend to be the ones that are truly in the upper quartile, top decile type performers. Just mathematically, it's easier for them to put up the 5x, 10x, 15x fund level returns. So it's not to talk on both sides of my mouth a little bit, but I do think that there's become so much noise, though, in the venture asset class, that founders are eager for signal, that they stand out, that they matter, to help them recruit and to build their teams and to win customers. There's so much noise that brand does matter. And we've seen it over and over in our referencing, that many of these brands, whether it's an Andreessen or others, continue to be very highly sought after by the best founders. And so, yes, they're big pools of capital. I do not think that all the platforms will perform similarly. I think certain of them have set themselves up to thrive at scale, and set up their teams and their fund structures and align the incentives to do so, and do so successfully. Others have not. And so we see there's actually meaningful disparity in performance between the large platforms, and we expect that to persist. But the small funds, do tend to be the most rewarding, but they're also the highest risk. So
You do both.
We do both. We do
both because
everything.
Green Spring was mostly smaller funds.
Yeah, so we invest in funds from kind of 20 million in size up to billions, every stage, every sector, every geography, solo GPs to the big platforms. We do both.
Here's what I think is important for the industry, that you have a platform like Andreessen that's willing to go do new and different things. Like there needs to be more innovation even within the asset class. And venture firms, I think, are probably being led by Andreessen Horowitz a little bit, trying to think about how can they bring value to portfolio companies in different ways. And I think that's led to a lot of firms thinking about how they can do things differently. And back to what Paul was saying about your article about zombies, there have always been zombie VCs after down cycles. There's nothing new to that. That's always going to happen when you have the capital waves that we have and the downturns after it. At the end of the day, though, if you look over a decade or two, everything continues to go up. I would make the argument we need more venture capital. It'd be nice if it didn't come in big waves and troughs, if it came more steadily. If we had more venture capitalists spread out across the country in different pockets, it's still more likely that VCs, particularly early stage, are more likely to invest with an entrepreneur who's close to them. And there are entrepreneurs everywhere across the country. But if they don't have that ecosystem to support them, they're not going to be successful. So when I go talk to members of Congress in the middle of the country, so-called flyover states, we talk about how we would like to help them unlock more capital for their states. How we have VC University and Venture Forward, which I'm very proud of. We've had over 3,000 people go through courses to understand cap tables, waterfalls, everything. We'd like to see more check writers that look like everybody in the country and that are located everywhere in the country.
Well, we have just about 2 minutes left, so I want to end, since you're all in the VC business, with predictions. And I want you to say one thing that you think is going to happen in 2024 in VC, and preferably something that is surprising or unexpected. So let's start with you, Tim.
Yeah, my predictions have not been very good. I said Bitcoin was going to be 250,000 in 2022.
You might get it.
Yeah. But I said in 2022.
Oh,
yeah. So I didn't quite hit the. No. I didn't hit the date. President Haley doesn't look promising either.
Third time's the charm.
And for venture capital, I feel like it's just more great things coming out of entrepreneurs. And I think, well, it won't be this year, but in 5 or 10 years, I think we'll have a $10 trillion venture startup company.
Will it be an AI company?
Yeah, could be. Could be. I mean, that's probably likely. They're going to all use AI.
Yeah.
Oh, I think this is kind of a fun one. I think that robotics hasn't made any of us any money, right? Robotics. Nobody's made any money in robotics, right?
no.
I think now might be the time, because we've gone from where AI was just rules-based, it was expert systems, to where we got neural networks now. And robots, instead of just taking the thing and moving it from here to here, are going to be able to say, oh, what is that thing? Oh, we don't want to do that. We want to take it and move it and put it over here so that we can do 5 of them instead. I think there may be something coming there.
So I'm a lousy predictor because I expected the downturn to start in 2018. And of course, it took a little while. I actually think we're going to see several reputably great companies fail this year, but we're also going to see some success in defense tech, which is a new growing sector.
That's true.
And is
Especially
underrecognized.
a couple of miles from here in El Segundo.
That's right. It's all around.
Yeah. So which companies do you think are?
Oh, I don't. Shield AI is a fascinating company. We just heard them over here. I think they have a great shot at it. They're doing. They're taking away my former job of flying fighter jets and with manned fighters in the Air Force. And there's several others that are coming along, cyber and AI related.
But you said we're going to be surprised at the companies that go under. What kinds of companies do you think are going to?
Oh, I think you're going to see Convoy-like companies go under. Convoy is, we all thought it was doing fantastically well until they announced they were closing doors. We're going to see some more of those.
Yeah, I was thinking about saying defense tech myself. So I think that's a big market opportunity. But I think for me, I would probably say that 2024 will be the year that I think the market really, for the first time, appreciates the venture capital secondary market. I think it's been very much under the radar and underappreciated. And in these times of dislocation and distress, it's a land full of arbitrage and intrigue and inefficiency. And so I think a lot of the GPs will increasingly use it as a tool to kind of take advantage of dislocation. I think LPs will recognize it as a core part of their allocation strategies and a hedge. So I think 2024 is the year of venture capital secondaries.
I'll say vintage funds for 24 will outperform the 20s, but we won't know for 8 or 10 years.
Let's hope so. All right.
Yeah, that's definitely.
Well, thank you so much to all the panelists.
I liked
Thank you to
all of their
everyone at March
predictions.
Capital.
Can I just go with theirs?
Everybody. Thanks, everyone. Thanks a lot. Stay dry.
Something to say, 'cause it ain't over until she sings. You had your reasons, you had a few, but you know that I would go anywhere for you. 'Cause it ain't over until she sings. I just need to get it up. You know, you know, you seem like me, more than you know, more than you know. I just
Ladies and gentlemen, our next panel session, How AI is Changing the Game for Cyber and Fraud, will begin momentarily. Please take your seats.